Thank you, Mr. Chairman. Chair Yellen, thank you for joining us today. I want to touch on some issues that some of my colleagues have also brought up, but keeping in that vein, and particularly with the news coming out of Greece for the past few weeks, I think it is important for countries to take a hard look at their own debt. Time for us to look in the mirror and address our own problems, including the over $18 trillion in debt that we have accumulated. Now, the Federal Reserve has employed an, I'll say, exceptionally accommodating monetary policy since the financial crisis to spur economic growth. However, we are now nearly 7 years, ma'am, out with the federal funds rate still at the lower zero bound. Both quantitative easing and low interest rates have made financing of the nation's deficits much easier and certainly has relieved pressure to enact real fiscal reforms to solve our long-term debt problem. Chair Yellen, both you and your predecessor, Chairman Bernanke, have argued that fiscal reform is important over the long term. However, you have also stated that fiscal prudence can be ignored in the short term to not hamper the economic recovery. Chair Yellen, it has now been 7 years. We can no longer say we are looking at the short term when we are dealing with our country's debt problem, can we?
So, like my predecessor, I believe the nation faces a very serious debt problem in the years ahead. At the moment, deficits mainly because of congressional actions and those by the administration have succeeded in lowering deficits to the point where for the next several years the debt to GDP ratio is stable, but over time under CBO projections, as the population ages and especially if healthcare costs rise above trend as has been historically typical, the country will face an unsustainable debt path in which debt to GDP ratio rises, and that requires further actions. That's mainly related to retirement programs, to Social Security, and even more important, to Medicare and health care cost trends. And so we've known about this for decades, and there remains a need for action on this front.
There does remain a need for action, and citing those latest CBO long-term budget outlook reports on some of the consequences of large and growing federal debt. This comes again from the CBO's long-term budget outlook. It cites things like less national savings, lower income, pressure for larger tax increases or spending cuts, reduced ability to respond to domestic and international problems, and a greater chance of a fiscal crisis. Are these things that you all consider at the Federal Reserve with regard to monetary policy?
I agree with the set of consequences that you just read to me, and ultimately when we see those things being manifest, those consequences, so in the years ahead, if deficits aren't addressed and become very large, they will put pressure on the economy that not right now, but in future years likely will cause us to have higher levels of interest rates than we otherwise would have, diminished levels of investment and productivity growth in this economy. We would have to offset those forces by having a tighter monetary policy. And we're not in that situation now.
Particularly relating to long-term debt leading to a greater chance of fiscal crisis, as they say. Is this something you discuss as part of FSOC when you're looking at systemic risk?
I've not been part of an FSOC discussion of this, but it obviously is a significant issue for the long term.
I have a short amount of time. When do we get to the long term, Chair Yellen? When are we there after 7 years and adding $8 trillion in debt over the last handful of years? When do we get to the long term?
The economy is recovering. I'm pleased by its progress. As I indicated, my colleagues and I think if the economy progresses as we expect, we probably will begin to raise interest rates sometime this year, and that takes us toward the long term.
And how does that affect our current debt, Chair Yellen?
Well, two ways. Higher interest rates will raise the cost of servicing the debt, but a stronger economy, which is what will cause us to raise interest rates, the stronger economy boosts tax receipts and is favorable for the federal budget.
Thank you.
Time of the
Chair Yellen.
gentlelady
I always
has
appreciate your being here.
Time of the gentlelady has expired. Chair now recognizes the gentleman from Michigan, Mr.